some point, if yields move too high, these countries are almost forced to take a bailout package. It's either that or they have to default simply because they can't afford the repayments. So I think Europe at the moment looking for Portugal to take a bailout. Hopefully that will stabilize the situation. But as we've seen with with the situation started in Greece and moved its way through to Ireland and now Portugal, these things just have a way of moving onwards as the focus shifts to other countries. I think Portugal will in fact take a bailout, and then we'll have to see what the market reaction will be.
We're looking at emerging market currencies. Devaluation of currencies seems to be the name of the game right now. We saw that Chile announce it's going to be shoring up its reserves. South Africa announced that late last year. We've also heard Brazilian authorities really concerned about appreciating currency, and they've even gone so far as to say that if the US melts their currencies, then the emerging markets will be propping up the US dollar. Do you think that is going to be relatively key as well?
Well, the problem, of course, Eleni, is that emerging markets currencies, regimes across the world have really borne the brunt of these so-called currency wars, if you like, that have played themselves out between Europe and the US, with China sitting on the sidelines. And, of course, free-floating emerging market currencies have strengthened quite dramatically, both against the euro and against the dollar over 2010. And these are the very nations that are trying to build their economies on back of exports and trying to create jobs on the back of exports. So, of course, that raises alarm bells, and I think it's going to be one of the trends for 2011, how these currencies like the rand and how the authorities handle the pressure coming down from all the quantitative easing taking place throughout the world.
So in other words, we can expect a currency war to ensue, David, this year. Of course, that was the big topic last year, especially during the G20 meeting.
Well, I think we can see the debate intensify. Whether it's actually a currency war remains to be seen. You know, the only ammunition or the limited ammunition that the emerging market nations have is to buy up more dollars. But that, of course, places a risk on their reserve holdings. And we've already seen China this morning, their reserves are $2.8 trillion, or equivalent of $2.8 trillion, and they're making a noise that their dollar holdings are too high. So, you know, it creates immense pressure on the management of those reserves, and I do expect the currency debate to continue for a large part of 2011.
Well, that said, I mean, looking at the local currency, we're sitting at around 684. I'm getting confused. It moves so, it's such a volatile currency, around 684 to the US dollar. Where do you see the rand going this year? I mean, I mentioned the Reserve Bank is going to be shoring up its dollar reserves as well, so perhaps that will add a little bit of pressure.
Yeah, it's a really tough call to make at the beginning of 2011. I guess one can only have a look at the macro issues as they play themselves out to try and forecast where the currencies are going to go. Right now, we have a fairly benign interest rate environment across the G7. Zero interest rates across most of those nations. That's feeding the inflow into emerging markets. But South Africa is not without its risks, and Eskom highlighted over the weekend that they're one of them. It's almost deja vu. We were at similar levels in 2008, I think it was, when the first Eskom story broke that they were going to cut power supply, and that affected the mines, and the rand moved quite heavily. So that issue hasn't gone away over the ensuing years, or the past few years. And really, with the global debt levels as they stand at the moment, it does pose great risk for the global economy. So we're on a positive sentiment starting the year out, but I do see that there's quite a few pitfalls, quite a few orange lights ahead of us. Very early to forecast what the rand is going to do, Eleni.
Well, David, what is the market telling us at this point in time, given the fact that you're very involved on a day-to-day basis? Are you starting to get a little bit of cautiousness coming through when it comes to the rand?
Yeah, we're still seeing relatively good export supply from the local exporters, but the market a little bit nervous. The bond markets are nervous, and from the messages that I've got at the start of this year is that some would expect the rand to weaken, certainly in the first part of the year, particularly if bond yields across the globe spike and cause a little bit of concern. So the market very, very cautious at this point in time, and I guess the recent the close of 2010 below 670 would have put a lot of confidence into the system. I'm not so sure that the rand is going to benefit as much as it did last year, and I do expect some of these issues as they play themselves out to cause a bit of nervousness in the system.
David, just touching on the Chinese surplus number that was released today, trade surplus of $13.1 billion in December, well below the analysts' expectations of $20 billion. But looking at the surplus with the US, that grew to around 26% from 2009. So there's still a lot of imbalances that are going to come to the fore. What is China's role going to be?
Well, China's role in the whole equation is going to be very, very key, depending on what they allow the yuan to do. They've kind of allowed it to settle around the 663, 665 level, and have left it there for quite some time. And of course, the US and Europe have been very vociferous about the manipulated currency levels that China has employed. I do expect the yuan or the authorities in China to allow the yuan to strengthen gradually as the year progresses. And of course, that will have implications for global trade and global currency levels. But I think it will be much the same as we've seen over the last few years. And they're not going to do anything dramatic. They're really, really concerned about the implications for the economy as a whole. So I do expect the yuan to strengthen gradually as the year unfolds, without any major shocks coming out from any currency movements as far as China is concerned.